Executive Suite with WPRI.com reporter Ted Nisi.
The Royal Bank of Scotland was rocked by the financial crisis. Bailed out to the tune of 45 billion British pounds, it's still owned by UK taxpayers. Now the aftershocks are being felt here in Providence, home to the headquarters of RBS's own Citizens Financial Group. The British bank just revealed plans to sell a chunk of Citizens in an IPO. But could the British government force RBS to sell the whole thing? This week on Executive Suite, the latest developments from London with Financial Times retail banking correspondent Jennifer Thompson. Plus, what does the Citizens news mean for Rhode Island? And with the Dow Jones Industrial Average at a new record high, what's the investment outlook going forward? We'll tackle those topics and more with WhaleRock Point Partners investment advisor Robert Cusack.
Welcome to Executive Suite. I'm Ted Nisi. Big news out of London last week as the Royal Bank of Scotland announced plans to sell a portion of Citizens Financial Group, which of course is based right here in Providence. We got the latest from London yesterday when I spoke by phone with Jennifer Thompson. She's retail banking correspondent for the Financial Times. Let's listen to our conversation. I'm joined now on the line from London by Jennifer Thompson. She's the retail banking correspondent for the Financial Times. Jennifer, thank you for joining me.
Thank you.
Jennifer, could you just give folks in Rhode Island the basics on what happened to RBS, the Royal Bank of Scotland, in the years since 2008 with the financial crisis?
Sure. Well, I mean, RBS was a British bank which was badly hit at the height of the financial crisis for two main reasons. First was its large exposure to commercial real estate, and the second was in 2007 it was part of a consortium which was taking over Dutch bank ABN AMRO, which was obviously the worst time for a takeover like that to happen. And when problems in the funding market began to emerge, and coupled with its reliance on short-term funding, it ran into difficulties which led to the British government's 45 billion bailout towards the end of 2008.
And 45 billion pounds for Americans, I think at current exchange rates, that's about $70 billion in US dollars?
Yeah, absolutely. I mean, it was one of the biggest, if not the biggest bailout of a British bank in British history. And, of course, it led to the government taking its 82% stake in the bank.
And now here we are in 2013, and the British taxpayers still own a majority stake in RBS and the Royal Bank of Scotland. I know the government and the bank's leadership have not always seen eye to eye on how to unwind that. How would you describe the current situation and relationship between Prime Minister David Cameron's government and the management at the Royal Bank of Scotland?
Well, in all honesty, I'd say it's very positive. I mean, the official answer is we don't know when they are going to divest their stake, and that's obviously the most pressing question for politicians. But I think the most interesting thing we've seen last week is the bullish noises from RBS Chief Executive Stephen Hester, saying that 2013 is going to be the last year of heavy lifting at the bank. You know, he came in at the end of 2008 to turn it around. The bank's been heavily restructuring in the last few years. They've made great strides with that, and I think that the recent signals have been that the relationship is good. Now, having said that, there is clearly pressure on RBS to make divestments, to restructure as fast as it can, and David Cameron recently said he wanted reform at the bank to be accelerated. And we also know now that behind the scenes, officials at the UK Treasury are working on various scenarios for reprivatization. So, I think it's fair to say the relationship is a good and a positive one, but at the same time, there is a kind of impetus to get this done. I mean, the British government owning such a large stake in a bank, particularly because of, the reasons for that, it's not a comfortable place for them to be. So, I'd say that there is pressure, although no one is setting a timetable yet.
And before I ask you about Citizens, you covered the retail banking sector. I'm curious what the public thinks about RBS at this point there in Britain.
Well, yeah, I mean, to the man on the street, probably it would be somewhat similar to the case for Citizens in the U.S. Talk of what's happening with the RBS restructuring probably doesn't mean that much. I mean, clearly people, get very angry when they hear about things like the LIBOR scandal. Of course, RBS recently made a settlement for that with regulators in the States and the UK. And when they hear about bad behavior in the investment bank of RBS, they're angry. And obviously, the payouts for the former chief executive, Fred Goodwin, aroused a lot of anger as well.
So now last week, RBS announced its earnings for 2012 and made this big announcement about Citizens. How was the earnings report for RBS, and then what exactly are they planning to do with their stake in Citizens here in the U.S.?
Well, in common with many banks, the earnings, the underlying performance at RBS, they say it is moving in the right direction, but clearly with all banks, exceptionals like regulatory fines, restructuring costs, they are weighing on results. I mean, in the last week, RBS confirmed rumors that they are looking to float at least part of Citizens in 2 years' time. And this is really the story of how RBS is restructuring after this bailout in the financial crisis. So, again, they announced, further, shrinkage to its investment bank. They've been progressively shrinking their balance sheet to reduce this commercial real estate exposure over the last few years. And what all of this is heading for is obviously the government being in a position where the bank is more profitable and it can start to sell its 82% stake.
And you, I'm sure, listened to the call that CEO Stephen Hester had with investors. How much detail are they giving at this point about floating that stake, doing an IPO in Citizens?
Well, it's difficult to say, really. I mean, they're being rather circumspect. I mean, I think first it's worth noting that, nothing is happening straight away. Stephen Hester's been very clear that this will probably happen in 2 years' time, so we're talking 2015. It's not a dramatic or a rushed step at all. And, of course, that 2 years simply reflects how long it takes to make, a bank or any entity ready for the sales process and bring it to market. So the float will also be partial. They're talking about a range of 15 to 25% maximum only. And of course, the market conditions for that have to be right. They're certainly not going to do this at any cost. And, management last week were joking, if there was a crash, then, of course, that kind of time frame will be pushed back. So, there's a little detail at the moment, but not a great amount. I mean, I don't think they've fixed themselves exactly how much they want to partially sell.
And have you gotten any indication why the bank isn't just selling Citizens altogether? I know I've read stories in the British press about some pressure to divest of Citizens entirely for RBS.
Well, I think there's two answers for that. I mean, first of all, the logic of a float is that it obviously allows them to test the market, to test the appetite of, people in a couple of years. I mean, obviously Citizens is a huge entity, so, the pool of potential buyers is naturally contracted by that. So a float will give them, an idea of how to value the bank as a whole and sidesteps this problem. The second reason for a float and for a partial float at that is that, it's very much a compromise. I mean, Citizens has always been regarded as a valuable business to RBS. They acquired it in the late 80s during a phase of expansion for the bank. It was well regarded by management as in giving them an extra, plank, an extra territory to be present in away from their domestic market. So the decision to float or sell would not have been an easy one. So, to my mind, the decision to have a partial float is something of a compromise.
And is it being seen in Britain as a first step towards selling Citizens, or possibly a longer-term move if it happens, as you say, because it's 2 years away?
I think it's being regarded as one of the many steps the bank is taking as it moves towards becoming profitable, and as it moves towards putting itself back into a place where the government can, realistically begin to divest, hopefully at a profit to the taxpayer. I mean, that day is still some time off. The shares closed today, I believe, at around 312p. The government bought in at a range, it depends on how you calculate it, but 410 to 500p. So, clearly at the lower range of that, they've still got a way to go. So, and there's lots of other, steps that they've got to take, which would, make selling a stake or selling part of the stake make sense. So I think that, really you've got to sort of see this as one of many measures the bank is taking, but the fact that they are prepared to go on the record about making it shows they're serious about getting the bank into that state again.
Jennifer Thompson, retail banking correspondent for the Financial Times in the UK. Thank you so much for joining us.
Thank you very much.
Right back with more on Executive Suite about the future of Citizens Bank and the investment outlook for retail investors. Stick with us. Welcome back to Executive Suite. I'm Ted Nesi. Joining me now is Robert Cusack. He's a veteran of the financial world, and he's now a portfolio manager at WhaleRock Point Partners in Providence. Bob, thanks for being here.
Pleasure to be with you, Ted.
And Bob, I know neither of us, of course, have much inside information on what's going on in the highest ranks of British executive suites about RBS and Citizens, but you know the financial world pretty well. So I thought maybe you could at least give us a sense of what you take from the tea leaves in all this. You just heard Jennifer Thompson describe what's happening now with RBS and Citizens. What do you make of the situation overall?
Well, I think the key observation that Jennifer made was the pressure that's on RBS right now from the government to do something. You know, this IPO of 25% of the company of Citizens is really a half measure, and it's only to satisfy the government and to buy time for RBS, because RBS thinks that in the future the value will be higher.
And do you think they're right?
Yes.
Yes? Why would the value of Citizens go up? What would be different 2 years' time from where it is today?
Well, you know, you'll have some growth to the economy. The value of the assets that they have will rise a bit, and there'll be opportunities with perhaps other buyers.
Now, why do you think they took this approach specifically? This is an IPO, an initial public offering, only 25% stake, so the bank, RBS, will still be the majority owner of Citizens Financial Group. What do you think might be the reason they did it this way?
Well, as she said, it sets a value, and it raises some capital, and it basically keeps the government off their back for a while. But, you know, the pressure is there, and it may well come to be that they lose their patience with RBS.
They being the government and officials, regulators?
They booked a loss of $9 billion for 2012. The government's into this whole thing for $69 billion US. I mean, it's a problem. And you know, in US, when we did those things with AIG, they were able to divest themselves and change things around and then repay the government. And all the banks repaid the government. So the UK government would like to see the same thing. They'd like to be paid back, or at least not lose anymore. So if they lose patience, they'll force a transaction for the whole thing.
That's very timely, too, because just this morning on the wires, on the Bloomberg wire, we had Mervyn King, governor of the Bank of England, urge the government, Parliament, to split up Royal Bank of Scotland and speed up the return of the lender to private ownership. He said to split it into a good bank and a bad bank. Presumably, Citizens could get at least parts of itself into the good bank. And he said it's a much more decisive restructuring. It shouldn't take more than a year to do. Now, he's the Ben Bernanke of England. So that's a pretty impressive person saying he wants that speeded up. So does that add to why you think there may be more pressure to do this in a quicker time frame?
Yes, because he's a very important person there, and what he says matters a lot. In fact, you know, you mentioned the good bank, bad bank idea. We did that in New England with Bank of New England back in the bad days of the late 80s, 90.
Yeah. Do you think the bank will find a buyer? And if that buyer came about, what do you think they'd want to do to Citizens Financial Group if they took it over and added it to their own portfolio?
Well, the whole idea of banks buying others is to reduce the headcount, take out costs without sacrificing revenues. And in this case, the problem is the price tag's over 10 billion, might be 10 to 12 billion. There are no banks big enough in US to buy it without already being too big under the too big to fail doctrine. So it'd be very difficult. In fact, most analysts think it's impossible for any US bank to be approved in a takeover of Citizens. So that leaves other banks, foreign banks perhaps, or private equity players. It's too much money for a private equity player, really. And not only that, but the private equity guys need to take out costs. And a standalone Citizens would be difficult to take out costs with. So the logical thing is for the Canadian bank that everyone talks about, TD, really the logical thing is for them to do it because they could take out costs and get a better return even though they pay a higher price than this IPO will set, for example. And
they've already obviously been trying to move into this market. TD Bank, just a couple of years, they've had retail branches down here in Rhode Island, they're in Mass and Connecticut now, but certainly Citizens have far, far larger footprint in this region than TD has now.
They would accomplish a lot by doing it. It just wouldn't be good for Rhode Island if they did.
Well, and we'll get to that in a second, but of course before that, on the other hand, TD Bank's CEO just last week said pretty firmly he doesn't want to buy Citizens. The Wall Street Journal said Ed Clark, this is the CEO of TD Bank, quote, clearly is getting irritated by the question. And he said, this is directly from the TD Bank CEO, given recent media reports, just to be sure, I want to try to put this question firmly to rest. We do not believe that a transaction to acquire RBS's Citizens Bank is available and meets our criteria. That sounds pretty clear. They don't want it.
No, to me, that sounds pretty clear that he has criteria, and if they're met, he does it. That's what I get.
You speak banker better than I do, maybe.
I'm able to translate it.
An ambassador. And so you said you think that might not be a good thing for Rhode Island. What do you think could be the impact if, and this is all speculative, but if TD Bank took over Citizens Bank?
Well, typically when a bank takes another one over, they look for areas of overlap, and they eliminate them. So the overlap for TD with the Citizens transaction would be in the processing and call center areas, the so-called back office areas of the bank.
So that's people calling in for help with their accounts, getting a check process through the system.
And I believe in Rhode Island we have more than 3,000 employees who are engaged in just those activities. So they would be at risk for layoff.
So that's something to keep an eye on for sure there. Citizens is, I believe, the second largest for-profit employer in Rhode Island after CVS Caremark. So a major employer and a major player here. All right, we have to take a break. When we come back, we're going to talk about the investment outlook from Bob's Perch over at WhaleRock and much more. Stick with us on Executive Suite. Welcome back to Executive Suite. I'm Ted Nisi. I'm joined by Robert Cusack. He's portfolio manager at WhaleRock Point Partners in Providence. He's also a master of Twitter, I would say. You're at R.E. Cusack, and you joined it. When did you join Twitter? When did you start to really engage with it?
Probably about 9 months ago.
And I have to say, you are one of those people. I'm so glad there are a number of great folks in Rhode Island who are on there who add a lot to the conversation. You bring your knowledge from outside and everything, but you've said you've actually found it worthwhile from a business point of view too, right?
Oh, it's tremendous. It's a great source of business research and investment research because a lot of very smart people are putting charts and their insights up on Twitter all the time.
And
so
plus
I find it great.
And I know you also need to keep up with Kim Kardashian closely in your life.
Well, I haven't found that need myself, Ted, but I know for you it's
for
available.
me, it's very important. Exactly. All right. So people at home might not have heard of WhaleRock. You guys are right in Providence, in the heart of downtown Providence. Founded in 2006, I believe. What do you do down there?
Well, we were started, in 2006 to manage about $150 million of investments for 2 Rhode Island families, and they'd grown dissatisfied with the banks and the product approach. They wanted custom tailored portfolios. Well, who wouldn't really, after all? So we do that for clients, and now we have about 40 different relationships and over $420 million, and we're growing. Last year we grew 20%.
Now, are you guys, does each individual portfolio from, say, a family with some assets, with some wealth, get a different management perspective, or do you pool the money and then WhaleRock sort of handles it almost like you might think of a hedge fund or something? How does that work?
It's all separately managed, and it's all custodied or held at either a bank or a brokerage firm. So we don't handle that part of it. We just manage the assets. And it's really up to the individual client. What we want to do is understand what's driving them, what do they need, and then we fashion an investment strategy to meet that.
And you said you started with $150 million ballpark. Where are you guys now?
Over $420 million.
It's quite a bit of growth.
Yeah, as I say, 20% last year, and not many investment management firms have
can
seen
say that,
kind
right?
of growth.
So one of your jobs is to watch the economy like a hawk, and that's one of the reasons we are always talking to each other on Twitter. What's the outlook right now? We've seen the economy weak, but not in recession, it seems like. What do you see in the broad U.S. economy, and then also particularly with the Fed and what's going on with money?
Well, we have a really slow, painfully slow growth economy. We've recovered out of the crisis. And Fed policy and others really fixed the system, but they saved the system, but they didn't really fix it for the future. Mm-hmm. So there's a lot of pains that is going through. It's characterized by high unemployment and basically a grinding kind of slow growth. That's going to continue. The Fed has intervened with low interest rates. They've really forced interest rates down to 0. Now that's allowed companies the chance to banks to rebuild their balance sheets, and individual companies, large companies, have also reduced costs. So their profits have gone up. In fact, from the depths of the crisis, the large corporate sector has increased its profits by about 130%.
That's a big increase coming out of such a big crisis.
And their stocks have gone up about equally.
We saw the Dow this week. Now I have to say my wonky side says it's not adjusted for inflation, so we're not back to the peak from 2000, but it is a new record number they've reached.
And the NASDAQ hasn't reached its peak, from before the dot-com bubble.
Yeah.
But still, it's a milestone, and the market's high. So the question is, well, what should people do now? Should people, jump into the market? What should their strategy be? We're very defensive in the way we look at investments.
What does that mean?
Well, we think that you've got to guard against losses, because if you were to have a 50% loss, and people who survived 2008 know what that's like, a 50% loss takes 100% gain to get back to even. So that should be kept in mind. We think that winning is just not losing. It really helps an awful lot. What happens is when someone loses, they tend to take more risk in order to get back to even, and it sometimes just compounds the problem. So what we look for is income-producing investments, ones that produce spendable cash flow. And that normally would lead you to bonds, but bonds are at the end of a 30-year bull market. And the problem is that prices can't really go up much more because interest rates can't fall anymore. So it's funny, this morning, one of the great wizened veterans of the investment wars is Leon Cooperman. He's a hedge fund guy, equity guy in New York. And he was on television this morning talking about the long-term treasuries. And he said a 10-year US Treasury at 1.8% is really, buying one of those is like walking in front of a steamroller to pick up a dime. You could do it, but it's probably way too risky.
Yeah.
And that's the thing. If interest rates rise, you'll see these bonds decline in value. And I bet a lot of viewers of this show probably own bond mutual funds. Well, those will go down in value when interest rates rise. And the track record of those managers really doesn't matter, because they've all been riding this 30-year bull market.
So everyone looks good when you have a market like that. I want to, while we still have time in the show, ask you about the Rhode Island economy specifically, and also you've kept a close eye on the fiscal problems in our municipalities, Central Falls, your own home of East Providence, Woonsocket. What do you see happening in the bond market, and what's the reaction from big investors to what Rhode Island's done so far to try to stabilize that?
There's a great recognition of pension reform at the state level. That's the big thing, because we can be a little insular here in Rhode Island, but Rhode Island's municipal finance news is front page around the country in the municipal world. They're all looking at what Rhode Island is doing. In fact, we're a leader with that pension reform bill. Now it's being challenged legally and all, and that'll be sorted out. But anyway,
There's 15 seconds left.
Rhode Island is viewed very positively.
We saw just today Providence floated bonds, and you said the market looked fairly confident that Providence is where it is and no extra penalty on that.
Right.
All right, well, that's all the time we have this week. I want to really thank Bob Cusack. Follow him on Twitter at RECusack. And I also want to thank Jennifer Thompson for joining us for London in the first half. If you missed any of this show or any other episode of Executive Suite, you can catch it on WPRI.com. Just go to the On Air tab. We'll see you next week and hopefully every week here on Executive Suite.